Good morning, everybody. Hey, welcome to Thursday, Jobs Day, May 21st. That'll be the first thing on the agenda today. We'll be looking at jobs, unemployment, first time claims, all that kind of stuff comes out this morning and top of mind. As we look at the market, yesterday closed well up. Today we are a little red. We'll talk about that a little bit more as soon as Dave joins us online, and that will be coming up next. Hang tight, guys.
Highlands Light FM. It's 8:41 here. 19 before 9. No, we're not going to do that. We're going to do this. There we go. It's time to check in on your money. All of the other music on the side notwithstanding. And there's a reason for the confusion. Tell you about it in a second. We're going to go downtown to find out what's going on with the economy and in the markets to Phillip Statler at Statler Financial Services. Phillip, we were discussing the first-time claims. Unadjusted first-time jobless claims, according to what I had off of the federal government, was 4.4 million new unemployment claims, but that was unadjusted. CNBC is reporting an adjusted number of 2.4 million. One of these days, you and I are going to have to figure out what they adjust in order to make that difference, right?
Well, yeah, and actually it's a little bit more than that, Dave. It's 2.44 because what was expected was 2.4. And so they missed by a little bit. And definitely it's close enough that most people, because the futures aren't reacting. Actually, they're actually getting a little bit better the last 5 minutes. So I'm thinking that people think that's kind of in line. It's going to be interesting to see what the actual unemployment number ends up being for this month. And they revised. This is something too. They revised the week before number down substantially because it had come in at 2.98, and they revised it down to 2.69 million. So that was good news too.
You know, these are still Armageddon level numbers, but they're at the very least pleasant surprises, and that's good to hear in the process. The other bit of good news that comes out of the federal government data dump this morning, the Philadelphia Fed Index. Again, each one of these Federal Reserve districts calculate these indexes differently, and the Philadelphia Fed Index this month was minus 43.1, which once again is an Armageddon level number, but compared to last month was minus 56 something, so that's even picking up a little bit. In other words, basically things kind of stink, but they're starting to not stink as badly, which would probably be the simplest description I can give to it.
Well, and it's, we are seeing the economy. People are getting back out. Jobs are becoming more available. People are actually going back to work a little bit. You think about here in Florida, Monday, and I know Monday's not part of that number, but hey, now we're at 50% capacity on restaurants, retail, and we've opened up the gyms now. So we are going to see more and more people get back to work, which means we're spending money, and that's going to be good for the economy. It's just going to be a slow effect in how long it takes to get us going.
Absolutely. Talking about spending money, those $1,200 stimulus checks are being spent, and they're being spent in interesting places. Walmart was saying that all of a sudden their bicycle department is doing a land office business as grown-ups are buying bicycles so they can go out with their kids and ride around the block. Things like that. Combination I find interesting and heartwarming at the same time. We're actually using them for family togetherness.
Well, and that's good, that we are using it. And I'm sure there's some people that are using it to pay down debt. There's some people that are putting in their savings accounts. And there's other people that absolutely need every dollar they get because they've been unemployed for 8 weeks now.
Absolutely. It's been useful on any number of levels. I know a lot of people for which it's been an absolute lifesaver. And the ones that for whom it's not a lifesaver, but it's an extra spiff, it's being used to stimulate at the same time. So this particular upchucking of federal money appears to be doing the good it's supposed to be doing, saving what it needs and giving some extra stimulus where the money wasn't absolutely needed, right?
Yeah, and that's where I think, when they got in that tiff in Washington last week about passing another stimulus bill, you have to give the first stimulus bill time to work to really figure out where do you need, what didn't that address, and where do we need to apply more funding before you just go massively put money out there. And so I'm thinking, putting the brakes on that one last week was a good thing, because we need to see how that first one, how it's applied, what does it really do, and where are the holes we need to plug.
That's probably the most succinct description of the intelligent approach to the stimulus thing I've heard yet, as the politicians throw rocks at each other for not moving fast enough, moving too fast, whatnot. I mean, hey, you fix your car, you'd start driving it around the block before you take it in for another tune-up, find out whether or not they fixed the part that was broken the first time.
Exactly. Otherwise, you may go in there and mess up something you already fixed.
Yeah, it all seems intuitively logical to me, but then again, we're talking politicians throwing rocks at each other in Washington. Hey, one other tidbit worth of news: the federal government announced they were going to be investing $1.2 billion to help AstraZeneca, one of the big pharma drug companies, pursue a coronavirus vaccine. That ought to give us a little bit of optimism as well.
Well, yeah, I would think that's just one more company out there trying to get a vaccine put together. But you question, okay, what's the payback, right? So, are we just throwing money out there, or are we going to get something for it down the road? When we bailed out the banks and we bailed out AIG back in the financial crisis, at least companies. The government got paid a profit for doing that with that stock. And so hopefully something like that's been arranged for this deal too.
I was going to say it ought to be an investment when we start helping out a private industry. A question I didn't get a chance to ask you before we went on the air. The futures have been falling like a rock basically from about the time that we closed yesterday until about the middle of the night last night, where we leveled off at a little bit of a downtick from yesterday. What did we do after we closed yesterday? Was that more tweets coming out of the White House?
I did not see anything to indicate that. I think that there may have just been people may have just been to the point that, hey, we've had several good days this week. And so profit taking may have come in after hours. I don't know. I didn't see anything specifically that gave me any indication. And now we're actually getting back closer to even right now.
That would be better. Yeah, after a 369-point increase in the Dow yesterday, a little bit of profit taking wouldn't be all that bad. I know a few companies have reported. The one that I noticed was TJ Maxx, TJX. They swung to a loss this past quarter, didn't they?
They did. And I don't have the exact numbers on it, but I know that I saw that it missed earnings by about 40 cents. They were expected to lose about 7 cents a share. They lost 47 cents a share. I did see that their revenue number was below expectations, and it was about half of what it was in the same quarter last year when it comes to total revenue. But they're trading up, so I'm guessing that being that they're up 5.6% this morning, that there's some optimism that there's going to be a lot of other retailers that are going to be dumping into the TJ Maxx line of stores to get rid of their inventory, which is going to pump up their inventory. More stuff for them to sell at a lower price means that they're going to be busy as soon as they get opened up and get going.
With all the brick and mortar retailer bankruptcies going on, I hadn't even thought about that. This is kind of like a bargain bonanza for the off-price merchants, isn't it?
Oh yeah, because they buy by the truckload. And and then they reprice it and sell it at a huge profit, really.
Absolutely. I hadn't even considered that as being a factor, but that's right. All these casualties of the brick and mortar bloodbath, the off-price stores like Ross and TJ Maxx are going out and saying, "Hey, wow, baby, it's Christmas time."
Well, and not just that, Dave, but even the people that aren't going out of business, right? The season has changed. So the Macy's, the Pennies, well, the Pennies in trouble, but the Dillards, all those guys, it's their winter stuff and spring stuff. It's done too late for that. So they're going to have to make some changes and adjust that. And that's going to go to TJ Maxx.
That's true. Season change took place during the shutdown, which kind of is El Stinko of your brick and mortar.
Yeah, it really is.
Anything else out of the earnings season?
I do have a lot of stuff in the earnings, so I'll be, let me just take 1 second. I'll be right back with you. I got quite a few things right here.
I think we have a delivery going on.
Yeah, my delivery made it here, so let me see. I just got that taken care of. I'll be right back. Okay, nothing like being quick on the feet, right?
Blathering, taking delivery, that works.
All right, so because we got some retail, right? We got Macy's. And this isn't Macy's final numbers, but they're giving a preliminary. They're floating a balloon, right? So they're going to be basically probably going to miss on revenue. They're going to have a bigger than expected loss on their overall sales. And so they're trading down today ahead of that 1.5%. Best Buy kind of caught my attention. They came out and actually beat this quarter.
Whoa.
They came in at 67 cents a share. They were expected to come in like 44 cents a share. Now, obviously, same-store sales fell off substantially, but they had a little better quarter than expected. But they're trading down 4% today.
I was a little surprised, too. I guess big screen TVs for the quarantine, I guess.
I think so. Then BJ's Wholesale, man, they came in, they beat almost double what was expected. Now, same store sales were up a little bit, but digital sales, their online sales were up like 350%. And so they're up about 4.6% this morning.
All right. Got time for one more headline news level.
So let's see. L Brands, we've been talking about them quite a bit. They missed by about 20 cents more than expected, which, they've been having a rough time anyway, and they're actually trading up about 1.6%.
I was going to make a snark about everybody's working from home. Who needs an overpriced bra? Setting the table for the morning. It was a green day on Wall Street yesterday. Dow was up by 1.5%. NASDAQ was up by over 2%. And the Standard & Poor's was up by over 1.5%. There was a drop-off overnight. And as you say, Phillip, it looks like it's recovering a little bit this morning. 45 minutes before the opening. Where we're going?
Hey, I need you to take it. I've got somebody at my door.
All right.
Sorry.
By the ribbons. Catch you tomorrow. It is Phillip Statler from Statler Financial. 45 minutes before the opening. Little bit of red ink this morning. Dow was off by 106 points. NASDAQ off by 33. And the Standard & Poor's off by 13.5. All those numbers between 1/3 and 0.5%. Not a major sell-off today. Commodities, gold is off by a little bit. Well safely over the 1,700 mark, though. 17.40 and 30 an ounce. That's down about 0.2% from yesterday. Crude oil, if you've noticed, the price of gas has gone up substantially. It's up 2.72% from yesterday. We're at $34.40 a barrel on crude oil, which is kind of sort of why your price of gas is getting back up closer to normal. Overseas markets, Asia traded slightly in the red overnight. Europe is trading in the red as well midway through their day. As Phillip has mentioned, Statler Financial Services is open. Call. Make an appointment. Stabilize your retirement fund. 382-0037 is the number on Statler Financial Services. You can find them on their webpage. You can find them on Facebook, where they post these exchanges between Phillip and me every morning. And you can catch them on the radio every single weekend, 3 times on News Talk 7:30 a.m., 6 o'clock and noon on Saturday, and 10 o'clock on Sunday morning for the Statler Financial Radio Show. Once again, a little bit of red ink this morning, but not a lot. 45 minutes before the money gets thrown around, and we'll be here tomorrow at same time from Statler Financial Services on Light FM.
Remember that first paycheck when you started working all those years ago? You're finally out on...
Folks, I know it's a little hectic today, a little different. I was expecting a delivery, had to run in and out of the garage real quick and sign some stuff. So, but glad you're able to join us today. I hope that you are having a great week. Hey, one more day of the week, and then we've got Memorial Day weekend. Looking forward to a little downtime. But before we go, if you're not sure what you're paying in expenses and fees, and you don't know what your financial risk is in the market, I mean, we've seen a great climb up from that rock bottom back in March. Now's a great opportunity to take the time to get a financial x-ray. Give us a call at 863-382-0037. Have a great day, and we'll speak to you again tomorrow.